One of the key questions for investors in 2026 is what the Fed will do with interest rates, not to mention who will be the next chair. For more on both fronts, let's welcome in Robert Kaplan. He's the former Dallas Fed president, now vice chairman at Goldman Sachs. It's always good to see you in person. Welcome back.
Good to see you, sir.
All right, let's start with the meeting that just ended. Would you have voted for a cut?
Well, would you have? So the question that we have today is based on all the economic news that we have right now, would you cut rates? So if you're a homeowner, should you refinance? Are rates going to go any further down? Are you looking to buy a house? Maybe the affordability of it is determined on mortgage rates. Maybe you're a realtor, loan officer trying to figure out what in the heck's going on with those and the whys behind it. So today we have a former Fed official. He's going to basically lay out the roadmap, what he would have done. So then we're going to take that path and figure out, okay, where are these things going to go from here? So without further ado, let's get over to today's news, especially back to that former Fed president to see what he has to say about this. But first off, folks, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. If you're out there and need some help getting a mortgage, I'd love to help you. But without further ado, let's get to today's news.
I probably on the margin would have argued against a cut, but
Really?
Yes.
Why?
I think we're going to head into a firming in 2026 due to regulatory relief, tax benefits, tax refunds, continuation of the AI boom. And I think a lot of the weakness we've recently seen in the job market, it's a little bit of tariffs on small business, but it's the shutdown. It was going to have a negative effect. The shutdown's now over. And I'm worried that we're now at neutral. Do you want to be at neutral when inflation's running above target?
So when you say firming, you're talking about inflation firming further from here?
I think the GDP growth is going to firm. I think inflation may be sticky in the first half of the year, but we'll have to see. But the way I would handle this is my attitude, once a meeting is over, decision's made, now the debate is what we do from here. And I need to see either a deterioration in labor or an improvement in inflation in order to act.
The labor market says you can cut again.
So there's uncertainty everywhere. So if you're out there, you're trying to figure out, okay, does it make sense for me to refinance now or even buy? If you're a homeowner right now, I got a tool for you. If you go to the rate update right through here, I created a RateWatch tool right over through there. Now that's for homeowners. Plug in what mortgage rate you'd be interested in refinancing. And when rates hit there, I'll call you. We'll go over what the numbers look like. And if they work, we'll get you locked into the paperwork started. We don't sell the data. It'll be yours truly reaching out to you. But if you're out there, you're trying to figure out what's going on with rates. Okay, we see this. We see that they're focused in on, well, these things over through here. So he basically said the Federal Reserve, what are they focusing in on? Well, they're focusing in on inflation, the jobs market, and right behind me is the GDP. He's saying, well, GDP is going to firm up. Unemployment rate might be a little bit high, but he's worried about inflation, and that those numbers are actually going to come in tomorrow. So let's get over to tomorrow's calendar to see what numbers are going to come in that might actually fill the gap on what this Fed and all the markets are looking for. So we go over to here on Wednesday, really nothing in today other than crude oil inventories. But now here's where the numbers really start to come in. So tomorrow we're going to get CPI, which that is consumer inflation. That's what you and I focus in on. And we're also going to look at initial jobless claims and continued claims. So this is going to give us a beat on weekly employment numbers and also the consumer inflation. Then the next day, Friday, we're going to get this number called the PCE. What is the PCE? Well, if you go over to here, this is what the Federal Reserve monitors in regards to inflation. So that ticked up a little bit recently. This ticked up a little bit recently, and that's why most Fed officials are saying no more rate cuts. So now you're thinking, okay, what should I do if I'm looking to buy in the spring or maybe looking to build? Well, let's get over to what my thoughts are on this. So if you're looking down the road, here's what we got to contend with in 2026. We have a Federal Reserve that most likely is going to be revamped with a bunch of people that's going to be most likely in cut mode because President Trump will assign them. We're also going to see that complete data on tariffs. How's it going to really affect the economy? I think we're going to be surprised there. And then the jobs reports, I think a lot of companies are right now saying, okay, we know there's a lot of uncertainty out there. We also know about the AI boom, and we have this healthcare thing, tax codes to deal with. let's let the dust settle and maybe we'll start to rehire in 2026 because even economists are saying we're going to have a pretty good GDP. So if we have a pretty good jobs report and tariffs aren't coming, going out the roof, well, most likely we're going to see rate cuts, but that could be 6 or 8 months down the road. So if you're looking to buy in the next few months or build, I don't think you're going to have any concerns. My quote for this quarter, or basically Q1 of 2026, I'm going to say rates are going to be about 5.875 to 6.25. We're right on my high end right there, and I'm just basically going to say that mortgage rates are going to be sticky right here for a while. So don't fret it. If you're looking to buy right now, just lock in. Don't worry about floating or trying to pick up a little bit better rate. But if you're looking to build or maybe buy in the spring, I think you're in good hands. To put you in even better hands, why don't you reach out to us? Make sure you qualify and you're pre-approved in the right program and making sure you're getting that payment and also the down payment amount you have in the bank. So if you really don't understand how all the moving parts work, reach out to us. We'd love to help you. Folks, I've been doing this for over 35 years. We're set up with over 30 different lenders because we have a slogan that's this: one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Well, the bank I work at provides me the licensing, but they also said, okay, when people call in, we want to make sure we can give them the most competitive products and rates. So what they did is said, okay, let's become like a broker. So they started adding in some of the biggest mortgage lenders in the country. These are lenders, banks, credit unions. So instead of you doing all the hard work, let us help you through this. So we can get you pre-approved, manage you from basically application to keys in your pocket, or if you're a homeowner right now, check out the tools right through there, or give us a call, because right now we're saving a lot of people a lot of money, and maybe you don't realize, but rates are in the 5% for a lot of people. So if you're in high 6% or even 7% interest rates on that mortgage, please reach out to us so we can make sure we're saving you some money. But hopefully now, if you're a homeowner, you understand how maybe all this works. If you're a home buyer, well, at least you know the process on how this all works. Maybe you're a realtor or a loan officer. And hopefully today, I basically solve some of those problems for you to figure out what the heck's going on with those. And hopefully you now understand the whys behind it. So thanks for watching, folks. If you haven't subscribed yet, please do so over there. And other than that, I will be back here at the opening bell to let you know how all this mess starts another day. See you then. Take care. Bye-bye.